Stop what you're doing. Put down your coffee, close the other tabs, lock the door. Because what I'm about to tell you is going to change how you see the world forever. We've spent years, even decades, being called conspiracy nuts. The big news channels laughed at us. Bankers in fancy suits made fun of us. They said silver is just a boring rock, gold is old junk from the past, and the Federal Reserve has everything handled. They said silver's price comes only from supply and demand. They said markets are free, fair, and open. And they said the super-rich elites, the ones who fly private jets to secret islands, don't even care about gold or silver. Friends, they lied to us. And today, we have proof. It's not just an idea anymore. We have hard evidence. And it didn't come from a secret tip or a government paper. It came from the past, like from the grave. It's Wednesday, February 11th, 2026. While everyone is busy watching fights in the Middle East, oil prices, or the latest celebrity drama, a huge batch of files just got dumped on the dark web. It's shaking up the top people in finance big time. We're talking about the Epstein files, but not the usual ones everyone talks about. People are all focused on the flight logs and which politicians went to the island. They want to know who's in trouble. And yeah, that's big, and it's about justice. But there's another story hidden in all that data. The money news people are scared to talk about it. It turns out Jeffrey Epstein and Ghislaine Maxwell weren't just running a blackmail scheme. They were also running a hedge fund. They handled money for some of the richest, most powerful, and shadiest people on earth. And when you see what they were buying with that dirty money, it proves everything we've said about the silver market. We found a bunch of emails between Jeffrey Epstein, Ghislaine Maxwell, and a top French banker called Only Bernard. Bernard is a normal name, but in Epstein's world of big finance, we have guesses about who he really is. But let's stick to what the emails say. These emails are from the early 2010s, right after the 2008 crash, when silver last hit $50. They show super smart thinking, deep market knowledge, and a lot of cold attitude. In one email from November 2011, Bernard is giving Epstein advice on where to put his money. This is rich, smart people talking privately. No TV cameras, no news shows, just the real talk. What does Bernard say? Does he tell Epstein to buy safe government bonds? Does he say buy stocks in the S&P 500? Does he say trust the US dollar? No, he tells him to buy silver. Listen to these exact words. Burn them in your mind. Bernard writes to Epstein, I'm fully convinced that a squeeze is possible if one can take delivery of 100% of the futures contract. Let me say that again. A squeeze can happen if someone takes full delivery. They knew this 15 years ago. They looked at the futures market. They saw all the paper contracts compared to real metal. They didn't see a normal market. They saw a scam, a Ponzi scheme that could be broken with math. Bernard spells out the plan clearly. You don't buy contracts just to bet and sell later. You buy them to wreck the system. You buy and then demand the real physical silver. He knew that if a huge buyer, someone like Epstein or the billionaires he worked for, asked for 100% delivery, the big banks would fail. The whole setup would crack. The price would shoot straight up. But it gets even crazier. Bernard gives a price goal. Remember, in 2011, silver had just fallen from $50 to $30. The news said the bubble popped. They told regular people to sell and forget it. But what were the elites telling Epstein? Bernard writes, I think that silver without undue speculation will end the year at $60 and that its inflation-adjusted value is $150 and $50. That's what they were saying quietly in fancy houses and on private planes. They knew even then that silver's true price, without all the tricks, fake trades, and paper games, was in the triple digits. They knew the official inflation numbers were fake. They knew the CPI was a lie. They did their own math and got $150. Think about that. If silver was really worth $150 in 2011, what is it worth now? After all the trillions printed for COVID? After all the bailouts? After the debt hit $38 trillion? If it was $150 back then, it's $500 today. And they didn't just talk. They did it. The leaked trade records with the emails show Ghislaine Maxwell placing huge buy orders. We see buys for First Majestic Silver. They piled up 3 million units. Why First Majestic? Because Keith Neumeyer is the only mining boss who openly fights the manipulation. He's the only one who threatened to hold back supply. Maxwell and Epstein knew that. They weren't buying an ETF or paper stuff. They bought mining shares and real metal. They wanted to control the actual supply. This kills the story that gold and silver fans are just weird people in tinfoil hats hiding in basements. The most connected people on Earth, people with dirt on presidents, princes, and prime ministers, were gold bugs. They were silver stackers. They bet against the Federal Reserve, they bet against the dollar, and most of all, they bet on a squeeze. So ask yourself why. Why would Jeffrey Epstein, a guy who could blackmail the whole world, want silver? Because he knew the biggest secret. Power isn't only about blackmail or secrets. Real power is being free. He knew the dollar system is a control tool. If your money is in dollars, the government can freeze it. Banks can take it. But if you hold real physical silver or gold, you're outside their control. You're your own boss. He knew the system was going to crash because of math. He saw the huge debt. He saw the crazy derivatives. He knew one day the party would end. And he wanted to be holding the only thing that still had value when it did. The email ends with one last guess. Bernard writes, "It is also likely that the gold to silver ratio will fall under 20. Under 20. Right now it's around 90. To get to 20, silver has to beat gold by 4 times. If gold stays at $5,000, silver hits $250. If gold goes to $12,000, like we talked about yesterday, silver goes to $600. This is the big end game. This is the biggest wealth shift ever, and they were getting ready for it 15 years ago. This leak changes everything. It proves every single thing we've been saying. The silver squeeze isn't a funny Reddit thing. It isn't a YouTube fad. It's a real plan the rich made to break the big banks and grab the real stuff in the world. But here's the difference. Epstein and Maxwell wanted to do it to get richer and rule the ruins. We want to do it to be free. We want to protect our families. But here's the scary part. If they knew this in 2011 and started buying, where did all that metal go? Where are those 3 million shares of First Majestic? Where are the real bars they took? They're gone. Hidden in secret trusts, locked in vaults, maybe in the Virgin Islands. They got ahead of us, but they moved too soon. They saw the squeeze coming, but they didn't know the manipulation could keep the price low for another 10 years. But now the manipulation machine is breaking. Now the real supply is actually gone. The idea Bernard wrote about, that a squeeze happens when someone takes 100% delivery, is finally happening. But it's not Epstein doing it. It's China, it's India, it's you. And that brings us to today's big news. While we're reading old emails, the future is hitting us hard. The squeeze Bernard talked about is happening right now. And the big shots are reacting just like you'd expect. They're not giving up. They're not saying sorry. They're changing the rules. They're closing the doors. If you thought the tricks were bad when they faked the price down, wait until they just stop you from buying at all. We need to go to Shanghai. We need to talk about the new order from the Communist Party. Because what Epstein's banker said about not being able to get metal just became official rule in the biggest silver market on Earth. While old ghosts whisper about a squeeze in leaked emails, the real world is shouting it loud in Shanghai. The elites like Epstein and Maxwell got ready years ago because they knew the math would break someday. They knew one day the real metal would run out. They knew the paper market, the futures, the LBMA, the exchanges, was promising stuff it couldn't deliver. And today, on Wednesday, February 11th, 2026, that promise just failed. We need to look away from the Caribbean and toward the East China Sea. We need to look at the Shanghai Futures Exchange, the real center of the world's physical silver trade. While you were sleeping, the Chinese Communist Party put out a new rule that basically ends the free market for silver in their huge economy. This isn't gossip. This isn't a secret leak. This is an official change posted right on the exchange's website, hidden in boring legal words most people skip. But we read it. And it's scary. Starting on the last day of this month, February 28th, the Shanghai Futures Exchange has a new delivery rule for silver. It's super strict and simple. It says any trader who doesn't have a special government-approved hedging quota for the near delivery month gets 0 lots in delivery. Let me make it super clear. 0 lots. It doesn't say less. It doesn't say wait. It says 0. That means if you're just speculating, you get nothing. If you're a rich family trying to save your money, you get nothing. If you're a regular person who bought a futures contract thinking you could take the real silver home, you get nothing. You have to settle in cash. You get paper money instead of the silver you paid for. The door to swap cash for real silver in China just closed for normal people. This is rationing. There's no other word. In a normal market, if silver is short, the price goes up until people sell. But China isn't acting normal anymore. It's a controlled economy getting ready for big trouble. They don't want the price to rise because that would show weakness, so they're rationing. They're saving every ounce of real silver just for big factories. Solar panel makers, missile companies, electric car builders, those are the ones with special quotas. Those are the ones the government says matter. Everyone else is called non-essential. Your money safety isn't important to Beijing. Think about what this tells the whole world. The Shanghai Futures Exchange is the most real silver market on Earth. It's where actual metal moves. Unlike New York futures, where almost everything ends in cash, Shanghai was where you got real bars. Now they're saying the shelves are empty. They're saying inventory is so low they can't let even 1 ounce go to private people. They're scared of a run on silver. They know if the Chinese people, all 1.4 billion, decided to turn even 1% of their savings into silver, the factories would stop in a day. So they stopped it first. They locked normal people out of delivery. This is the biggest proof of shortage. You don't ration something that's everywhere. You ration what is running out. You ration what the country needs to survive. By making this zero lots rule, China just admitted silver is their most important strategic thing. They're basically taking it all for the state and its factories without calling it that. They're saying this silver is ours, not yours. Now picture you're rich in Shanghai and see this rule. Do you think, okay, I'll just leave my money in the bank? No. You freak out. You realize if you can't get silver on the official exchange, you go to the black market. You buy through jewelry shops. You use smugglers. This rule is going to make underground demand explode. The extra price on real bars in Shanghai streets is going to skyrocket. We're already hearing premiums hit 50% over the normal price in the secret market because when the government says no, everyone wants it more. And when this news spreads to the West, when traders in London and New York realize the world's biggest factory is out of silver, it means China will stop sending out finished silver products. It means they'll buy even more from everywhere else. It means they'll drain the global supply to feed their protected factories. The pull we talked about yesterday, the East sucking metal from the West, just got super strong. China isn't buying to make money anymore. They're buying to survive. This is the squeeze Epstein's banker predicted. But it doesn't look like a huge spike on a chart yet. It looks like a locked door. It looks like an official notice saying no delivery. It looks like a zero lots paper. This is how a market dies. The price on screens might still say $72 or $80, but that's the price of fake silver. It's the price of a picture. If you want real silver in Shanghai today, you can't get it. For normal people, the price is basically endless. And while China locks its doors and rations, another big player is waking up. While Beijing defends, another Asian giant attacks. They're not rationing. They're gobbling up silver like crazy. They're buying so much they're changing the whole world's supply and demand by themselves. We need to look south. We need to talk about India. We need to talk about the 13.5 million ounces that just disappeared into that country. While doors slam shut in Shanghai, while Beijing officials scramble to ration every bit of silver for factories, a different panic is happening over the mountains. A panic of buying everything. A panic of wanting more. We have to talk about the other giant. The sleeping one that just woke up and decided to eat the world's silver for breakfast. We have to talk about India. If China is the dragon hiding gold and silver in secret vaults, India is the elephant stomping through the market in plain sight. And right now, the elephant is very thirsty. We just got the official numbers for silver imports and ETF holdings in India for January 2026. And these numbers aren't just big. They're not just good. They're market-breaking. They're the kind that make math computers crash. In just the first 31 days of this year, Indian silver ETFs, the funds middle class and rich people use to save money, added a huge 13.5 million ounces of real silver to their safes. 13.5 million. Let that hit you. That's about 420 tons of metal in 1 month in one country. And remember, this is only the ETFs. This doesn't include jewelry buying, silver items for homes, or the huge cash market in Mumbai and Delhi bazaars. This is just the money investment side. But don't look at January alone. Look at the pattern. Look at the speed. This wasn't random. This wasn't luck. It came right after a record December in 2025 when Indian investors added 23 million ounces. 23 million. Do the math with me. 23 plus 13.5 or 36.5 million ounces taken out of the world market in just 60 days. 36.5 million. Do you get how massive that is? The whole world mines about 800 million ounces of silver a year. So in 2 months, Indian investors alone took almost 5% of the entire yearly mine output. Just the investors, just the ETFs. If they keep this speed all year in 2026, India alone would take 220 million ounces of investment silver. That's more than a quarter of the planet's total supply. And that leaves zero for everyone else. Zero for Tesla, zero for Apple, zero for Samsung, zero for the US Mint, zero for you. Why is India buying like this? Why are they acting like silver is disappearing forever? Because they're smarter than us. Because they remember history. In the West, when silver drops to $72 or $80, we get scared. We sell. We think it's broken. In India, they see a drop and think sale time. They remember when paper money crashes, they know rupees, dollars, any paper money can go to zero. But silver is wealth. Silver lasts forever. Right now, India's economy is growing fast. They're building solar farms almost as fast as China. They're making electronics to take over from Shanghai. They need silver for factories. But even more, India's new middle class, hundreds of millions of people, is waking up to the world money problem. They're seeing inflation eat savings. They're seeing wars and chaos. And they're doing exactly what Bernard told Epstein to do 15 years ago. They're taking delivery. They aren't buying paper promises. Indian ETFs have to hold real metal by law. When someone buys a share on their phone in Mumbai, a real bar moves into a vault in London, Zurich, or Gujarat. It's checked. It's real. So every time an Indian mom buys a few shares, metal leaves London LBMA. Metal leaves New York COMEX. The pull we talked about, the East sucking metal from the West, is powered by 1 billion people who know real assets matter. This makes a scary fight in the world market. On one side, China is scared of running out. They're rationing. They're locking doors to keep silver inside. On the other side, India is scared of missing out. They're hoarding. They're buying 13.5 million ounces a month. They're breaking doors to get more in. In the middle sits the COMEX. In the middle sits the US dollar. In the middle sits the price saying silver is $72. That price can't handle this fight. You can't have the two biggest countries on earth battling over something limited while paper says there's plenty. Something has to break. The COMEX can't feed both Chinese factories and Indian buyers. The math fails. The London vaults that supply both are getting emptied from both sides. China takes industrial bars. India takes investment bars. The West gets nothing. This is why smashing the price to $80 was the worst mistake in money history. By dropping the price, Western banks thought they saved the dollar. Instead, they made it cheap for India to buy 36.5 million ounces. If the price was $150, maybe India buys less. But at $80, they bought it all. They emptied the store. And this takes us back to the Epstein emails. Remember what Bernard said? A squeeze is possible if one can take delivery of 100% of the futures contract. He thought it would take one rich guy to do it. He thought it would take a whale like Epstein. He didn't know it wouldn't be one person. It would be a whole country. India is the whale Bernard predicted. They're taking delivery of millions of ounces every week. They're acting like one giant buyer cornering the market, not by tricks, but by huge, real demand. This proves the idea. It proves the squeeze isn't just talk in secret rooms by bad rich people. It's happening right now in the real world between countries. The elites knew it was coming. The Epstein emails show that. But they couldn't stop it. They could only slow it down. And now, with China rationing and India hoarding, the slowdown is over. The dam is cracking. And if you want to know what happens when the dam breaks and everything floods, you have to look at the charts the big bank analysts are quietly sharing. They're not looking at $100 anymore. They're not looking at $200. They're looking at a super cycle. They're looking at a move like the 1970s, but way bigger. We need to talk about $1,000 silver. We need to talk about the cup and handle pattern that's been building for 45 years. So let's connect everything. Let's link the old emails from a dead billionaire to the panic in China right now. When you see the full picture, it's scary clear that the conspiracy idea from 2011 is now government action in 2026. Look at what Bernard wrote to Epstein 15 years ago. He didn't say buy silver because it's pretty. He said a squeeze is possible if someone takes 100% delivery of futures contracts. He spotted the weak spot in the system. He knew the whole precious metals market was a fake reserve trick. He knew for every 500 paper ounces traded in New York and London, there was maybe one real ounce in the vault. The banks bet no one would ever ask for real metal. They bet people would keep trading paper forever. But Bernard asked the bad question. What if we call their bluff? What if a big buyer says, I want the metal, all of it, not cash? He said if that happened, the exchange would break. The price would skyrocket. Banks would fail. Now look at Shanghai today. What is the zero lots rule? It's the exchange saying they can't deliver. It's them saying demand for real metal beat supply so bad they had to change rules to avoid failing. They're basically saying Bernard was right. They're saying delivery is the kill switch, and since they can't survive it, they turned it off. But here's the funny part. Bernard thought the big buyer would be one person. He thought Epstein or a hedge fund. He was wrong. The big buyer is India. India is doing exactly what the email said. They're taking delivery of 100% of their contracts. When they buy 13.5 million ounces, they don't roll over. They don't take cash. They take bars. They fly them out. They remove them from the system. So we have the perfect storm. We have the leak showing elites knew the weak spot. We have the Shanghai ban showing the weak spot got hit. And we have India hitting it hard right now. This proves everything. The squeeze isn't coming. It's here. The system is breaking live. And if you want to know where the price goes when the paper price finally matches real life, you have to look at the supercycle. You have to look at the chart saying $1,000 isn't crazy. It's math. But to see where this train is headed before it leaves, don't stare at the 1-minute chart. Don't watch the daily ups and downs at $72 or $80. Zoom way out. Zoom out so 45 years fit on your screen. Because when you do, you don't see a crash. You see the biggest chart pattern in money history. We need to talk about the super cycle. The big analysts who talk to rich country funds and central banks are quietly sharing a chart that's scary. It's called the cup and handle. But this isn't a quick one that forms in weeks. This one started in 1980. Look at the past. In 1980, silver hit $50. That was the left side of the cup. Then came a 30-year down market, the bottom of the cup. In 2011, silver hit $50 again. That was the right side. And for the last 15 years, from 2011 to 2026, we've been making the handle. We've been moving sideways. We've been shaking out scared people. And now we've broken out. When a pattern takes 45 years to form, the move when it breaks isn't small. It's huge. The target for a cup and handle this big isn't $100. It's way more. If you measure the cup depth from the breakout, a safe target is $300. But if you adjust for real inflation and today's weaker dollars, the target is $1,000. This sounds nuts to normal people, but history says it's coming. We're seeing a repeat of the 1970s. Look at gold back then. Gold went from $35 to $195, up 5 times. Then it crashed. It fell from $195 to $100, lost half its value in the middle of the bull run. News called it a bubble. Regular people sold. They thought it was done. But that was just a pause. From a $100 low, gold shot up to $850, up 8 times after the drop. We're in that same pause moment with silver. The run to $121 in January was the first big move. The drop to $80 is the pause. It's the shake designed to scare people off before the real rocket starts. Smart money knows this. Epstein knew in 2011. Indians know now. They're not scared of drops. They love them because they know the next move isn't slow. It's going straight up fast, maybe overnight. We're looking at a 6 to 8 year super cycle where silver stops acting like a normal thing and starts acting like a money crisis. When Shanghai's no delivery meets India's endless buying, the price system will break. We'll wake up one day and see $200, then $400, then $1,000. This is what happens when a broken system fixes itself. The chart screams it. The real facts scream it. And the rich have been getting ready for 10 years. So the question isn't if it happens. The question is, will you hold worthless paper or real metal? We have one last warning. We need to tell you what to do today because if Shanghai is closed, New York is next. Here's the bottom line. We looked deep into this money mess. And at the center, we found a market that's not just broken. It's shut down. We started with old ghosts, Jeffrey Epstein and Ghislaine Maxwell, and leaked emails proving the rich knew the game was fixed 15 years ago. They knew silver was really worth $150 back then, and they got ready for a squeeze to break banks. We moved to now in Shanghai, where the zero lots rule officially banned normal people from taking delivery. The second biggest economy told its people the metal is for the government, not you. And we saw the huge buying in India, where a billion-person country is pulling 13.5 million ounces a month, acting like the whale Epstein's email predicted. You need to feel how serious this is. The squeeze isn't a guess anymore. It's government action. When Shanghai says zero delivery, they're saying the real shortage is bad. They're saying they have no extra stock left. And if Shanghai is empty, what about London? What about New York? These markets are linked. If one runs dry, the whole thing feels it. The effect from Shanghai is already moving west. Premiums are going up. Wait times are getting longer. Dealers are saying maybe in 6 weeks instead of tomorrow. This leads to the biggest question you'll ever have as someone with money. If you can't get delivery in Shanghai today, how long until you can't get it in New York? How long until COMEX says force majeure? How long until dealers put sold-out signs online? It happened in China fast. One day you could buy, the next you got zero. Do you think the US will be nicer? Do you think they'll warn you? No, they'll do the same. They'll change rules to protect big companies and leave regular people out. You're in a race right now, not against other small buyers. You're racing India, you're racing China, you're racing Epstein's old plan. Everyone is trying to get through a door that's closing fast. Winning means you get financial freedom. Losing means you're left with useless paper while real stuff flies to the moon. Smart Money said in 2011 the real value was $150. With inflation, that's $500 now. The chart says $1,000 in the big cycle, but your screen says $80. That huge difference between price and real value is your chance, but chances like this don't last. Looking at the panic in Shanghai, that chance is ending now. Don't wait for a dip. Don't wait for the perfect price. Don't wait for TV to say buy. By the time news says it, zero lots will be here too. Get the real metal in your hands. Get it out of the banks. Be your own bank. This is John Egg. The link is out. Delivery is zero. The squeeze is on. Stack now.